All right. Hello, everyone. Evening. If you can hear me right now, drop a comment, say hello, and we'll get the session for Friday moving and started together with all of you. All right. Hello, everyone. Knock, knock, everybody around. Hi, Anthony. Thank you for being the first one to greet us over here. And thank you, Facebook user. Facebook user, can you go to the StreamYard link, all right, in the post itself, all right, and just click through it, and you'll be brought to another page, and just click on the Facebook button and approve it, yeah? All right, hi, Jason. Hi, Stanley. Hi, Modreen. Okay, now, so, thank you very much. Unfortunately, I don't know who you are. All right. But thank you very much for the compliments. Yeah. All right. Now, hi, City Chai. Hi, Xinyan. Okay. Now, so let us get started. Hi, Ying Wu. All right. Now, so once again, if this is your first time with us, okay, you can see on the screen, there is a link over there. You can just type it out as well. Just go to streamyard.com/Facebook. All right. And you'll see a blue color Facebook button, which says approve for Facebook use. All right, and once you do that, okay, when you leave a comment, all right, you will start appearing like City Chai over here, all right, where he says hi, but I can see that it is he, all right, who's leaving the comments for me, yeah? All right, now, thank you very much. Now, so once again, let me get started by greeting all of you, okay, and letting you know about the standard disclaimer before I get going, okay? Now, so this is a live portfolio building session, right? So I will be suggesting or I will be discussing live trades that I will take and that I'll put on my model portfolio that I use and build every Friday together with all of you in attendance. Right now, but before you go ahead and do any of these trades on your own, please bear in mind, you need to be aware of how I'm doing this, right? How much capital I'm allocating for every trade, right? Be aware of all the risk involved in every trade that I'm doing and talking about before you actually go and place them on your own accounts. Okay, now, so for graduates of mine, right, please be very clear and aware as well, right? The trades that I do in these sessions, right, may not be the same trades that I'm doing with all of you, right, during the member session or mentorship session. Okay, why? Okay, for a very simple reason, right? What I do here on Friday has an investment perspective. Now, when you have an investment perspective, we are looking at good fundamental stocks, okay? And I'm being a willing investor for the long term. So in sessions like this, where I'm doing it only every Friday, okay, now I ignore all timing factors, which means I don't analyze charts, I don't look at charts. As long as the stock presents cheap fundamentals, all right, and good profits, there's nothing wrong with the fundamentals, but cheap valuations, all right, I'm more than happy to establish a position, right? But when we are trading, right, by selling options, all right, it will benefit us if we actually take timing into perspective. Right, so I hope you see that difference in element over here. Hence, some of the trades I take in these sessions may not be the same trades that I'll be doing, all right, during the member session, okay? All right, now, so that is out of the way. Now, let's address the public people, right, who are joining us. If it is your first time, let me officially welcome you to the session, all right? Do come back together with us for every Friday because many of them will tell you, right, whether they're my students or not, there will be many, many golden nuggets that I split out. Yes, I say I split out because, you know, many times once I get into grooves, all right, I don't control myself, all right? If it's meant to come out, it just comes out over here, right? It's meant to educate you. It's meant to, you know, make all of you a little bit more aware, okay, when you're investing, okay, and hopefully to turn all of you better investors. Now, my aim in this session is also very simple, right? On an annual basis, okay, just by taking trades on Friday every single week, excluding, right, Singapore public holidays, excluding US trading holidays. Okay, whatever trading session is left that happens on Friday, we will try to establish positions, we will take trades, all right, and I'm looking to build a double-digit portfolio. Now, so for those of you joining us for the first time, we hit 17% returns in year one, right? And we've just commenced year two in the month of August 2021. So let's see what year two has in store for us, okay? Now, so without further ado, let's get going. Hi, Jimmy. All right, now, so I'm going to start off today's session as usual, right, with a market update, with a market outlook. And Jackson Hole, it is over. All right, Jackson Hole is over. So what has market brought us? Market has brought us absolutely nothing. all right, it's continued to be a vacuum over here, all right, and it's sucking and sucking and sucking more unknowing investors into this market, all right, thinking that they're too late, all right, and they need to chase, right? But these are never times, okay, where you should get yourself into the markets, okay, for some reason. So because, all right, if you look at what's happening right now, okay, the markets are constantly going higher and higher and higher, okay, but what's happening at the same time, okay, is that you realize, okay, if I'm not wrong, okay, this is still present and this is still relevant over here, all right? I need to change this to SPX, SPY. All right, and you can see what I'm talking about. All right, now, so we have this rebound over here that's going up and pushing the market very, very high. But can you see what's happening to the volume, all right, in the marketplace? All right, the volume is actually getting lower right now. So if you have a move that is actually sustainable, right, it should come with participation. I hope all of you understand that, because without any participation, right, anything that happens that is launched, right, will eventually die off, will eventually cool off. Right, and in this case, with a market that's already so expensive, that's so high in valuation, where you have so many of these market squeezes happening all over the place, right? When it turns, when it gets ugly, all right, okay, everybody is heading for the exits at the same time. All right, now I'm not saying that the market is going to go to a full-blown crash, because the fundamentals doesn't support that. All right, corporate earnings are strong, okay, but if you realize what's happening right now, it definitely needs, all right, a revaluation, all right, a recalibration, right? To be healthy for another run over here, right, it needs to recalibrate, right? Now, what we have over here is just a witness of a quick, swift move, right? But then it resumed upwards, right? Jackson Hole was supposed to provide the bullet, but it didn't, right? So will we see next Monday, right, where we have that turnaround? Now, why do I say next Monday? Because just like federal meetings, right? Many of you may not have realized that, okay? But there is, a pattern that occurs where, the day after the Fed meeting, all right, the movement of it will always be the opposite of the day, right, when the Fed meetings announcements have come out, right? So Fed meetings usually end on Wednesday. So the effect kicks in on Wednesday market. But if you go out there and take a look, right, Thursdays will always be a reversal of the move that happens on Wednesday, right, whenever there's a Fed meeting. Right, so will it happen to Jackson Hole as well? Right, no idea. We have a look. Yeah, okay, because there are a lot of news that's coming out, right, that talks about a lot of senators supporting the fact, all right, that we should taper the bond buying. All right, now, so would they like it or not? Who knows? Let's have a look. Yeah, all right, now, but meanwhile, all right, the plan stays the same. If we're going to build any positions in the portfolio, any stocks that I look at first, right, they have to be fundamentally sound. Number two, all right, I'm selling options on them, right? So I don't want, okay, them to suddenly come crashing on me, right? So I'm going to go with defensive stocks, right? Defensive stocks with cheap valuations. Why? Because when money gets risky, money runs for the safety net, right? So what kind of stocks in the stock market offers these people what we call safety hideouts? Defensive stocks, right? Staples, right? So that's where I want to be for the next move from the market itself. Okay, now, so that is out of the way. So let's go and look at our portfolio. All right, so let's start looking position by position. All right, now, if all of you didn't forget, we do have a position on JD, all right, which, suffered the stock market collapse in China, right? Okay, there was a China wipeout. Okay, but let's see what has happened to JD now. All right, now, so JD, let's have a look, everyone. JD, we have a 2022, 21st January, 77.50 put. Now, we sold it for $9.35, all right, sometime in April. All right, now, so what we did was we started our trade back. All right, we started our trade somewhere back here, everyone. All right, and then what has JD done? It's done absolutely nothing, right, before the entire collapse of China stocks, right? Okay, the government wipeout. Okay, but what has it done? It has done stellar on the earnings, and then boom, it went back up. Right now, so it has enjoyed, okay, what we call the low valuations. Okay, now, before someone goes scolding after me, yeah, Eka has already done it. I apologize again. All right, okay, now, so I've taken it off, yeah? All right, now, I remember, just a little bit slow. Okay, okay, now, so yes, so JD has recovered over here and it's gone above this support line or this resistance line that we're talking about. So let's look at the premiums. I have a January 2022. $77.50 puts. It's worth about $8.45 today. And look, everyone, all right, we sold it for $9.35. I'm in a profit. All right, I'm in a profit. Why? Because if I close this trade today and I buy back this put option, I pay only $8.45. All right, and when I sold this, I collected $9.35. All right, so after many months over here of battling this stock, all right, I'm still profitable. But of course, I'm going to stay the long term. Yeah, all right, that means I'm going to continue to wait because there's nothing to shout about. All right, so as portfolio builders with selling options, right, this is what I'm looking for. All right, so I anticipated this. If all of you remember, I explained it to all of you. All right, I know it's cheap, but I'm not sure if it's going to go booming upwards over here because of the instability. Yeah, okay, now that's why I chose a longer expiry. All right, and it proved me right. Okay, now, so let's go to our next position. That's VZ over here, all right, that you're seeing on the screen. So I have a Verizon Wireless, September 17, 57.50 puts. We sold it for $2.43. Now let's check on it and let's see what it's worth today. All right, what has VZ done? VZ has continued to weaken, all right, with the markets. Now, can anybody tell me why this stock is weakening? It's actually very simple, because money is coming out of safe stocks and going into risky stocks. That's what the market does when it's going up. Right, money goes into financial stocks, money goes into technology stocks, all right, and these money from the funds will have to come out from somewhere, from some other stocks, all right, and that's where they're coming out from the defensive stocks. Am I worried? I'm not worried, okay, because once the market turns around, you're going to see big swings like that, all right, that you see happening over here, all right, that's just how it is. Yeah, okay, now, so this is just a dip over here, but I'm nothing to worry about. So we have the 17th September, right? Okay, let's go have a look at the premiums today. All right, 57.50 puts. So it's about what, 280? All right, let's take the middle over here. Let's say about 280. All right, that's okay. I'm barely underwater. Yeah, okay, look, my strike is 57.50. All right, the stock is actually severely under the strike, right? Yeah, it's like 54.50. It's like almost $3. All right, but have I lost money? Not really. All right, now it cost me like 280 to get this close today. All right, and when I sold it, I collected 243. All right, I'm down like what, 40 cents? All right, I'm perfectly fine. All right, and again, when I do these trades on Friday, right, even when I have to hold this trade until expiry, I'm more than happy to actually buy and own the stocks. Why? Because for all these positions that I'm selling, I've allocated full capital, right, for every trade, which means I have the money set aside to actually buy the stocks. Yeah, okay, I've done so twice in this entire portfolio over the last 1 year. All right, I was forced to do this twice. Once with Nokia, once with Consolidated Edison. All right, where on expiry, the stock price is below the strike that we sold. We took the stock, all right, and then we turn it profitable after that. Yeah, via the stock. That's perfectly fine. Yeah, okay, now, so I'm hanging on to this position. We can't do anything. Let's go to GIS. All right, so next one, GIS. All right, now 17 September, 60 puts, 180. All right, so same drill as well. All right, market has been going up, defensive stocks has been coming down. All right, now, so we had profits on this trade last week, but it's probably gone right now. So let's take a look. 270. All right, we are under. All right, we're under, but I'm perfectly fine. I'm holding on to this trade. Okay, why? Because it's defensive. All right, and I'm still playing with the next move of the market. All right, now next one, CAH, 17 September, all right, 50 puts for 112. All right, now, so CAH, oops. All right, we have the 50 puts over here, all right, for 17 September. It is worth about 45 cents. So if I close this today, all right, I can pay about 45 cents and get it closed. Now, this option has about three weeks left to go, okay? 3 weeks left to go. So let's do some number analysis over here. All right, now, I collected 112, okay, when I opened this trade. So this trade had about 8 to 9 weeks when I opened this trade. And we're left about 1/3 of the time, right? Okay, 1/3 of the time. And we can see, all right, the premiums right now is actually more than 1/3 of what I've collected. So it still makes sense for me to hold on, right, and stay in this particular trade. There's still a lot of time value left, right? So for this reason, right, I'm not going to relieve this trade, which means I'm staying put, okay? I'm staying inside. Okay, now let's go to the next one over here, Rio. Another one of those stocks which collapsed the moment I went in on the trade. Okay, let's look at how it's done today. So we have the 17 September 77.20 puts for 180. Hey, look, all right, it's recovered. All right, so it went all the way down. All right, and then today it's recovered back to 75. All right, and we have a strike of what? 77.20. All right, so we still have a great fighting chance over here. And I've said this as well. This is definitely one stock I'm more than happy to hold on to it. Why? Because it pays a dividend return of almost 10% per annum right now. Right? It gives you a 3.76% dividend. It pays it semi-annually. All right, and you can see, all right, in a year, that's almost 376 times 2. So that's going to be like 720. All right, 720 or 740, right? Okay, and the stock is about $75. That's roundabout almost close to 10%. Yeah, all right. So can you see the dividends are really, really yummy right now? Okay, of course, it does come with a higher risk because it's commodities, right? Okay, but it pays 10%. And it's Rio Tinto, which means, all right, it's one of the biggest commodity stocks lying around that still exists in this world, right? Now, so as long as you're comfortable with the risk, all right, I'm happy to actually, commit and buy the stock if it doesn't go back above 77.20, right, by 17 September. All right, I'll probably sell some call options on it if I have to, right? But again, all right, I'm staying put. Yeah, it costs about $3 today if I'm closing the trade. Okay, and when I did this trade, oops. All right, when I did this trade, oops. Oh man, there we go. All right, I sold it for about 180. So we're down by, about $1. All right, that's perfectly fine as well. Now let's go to our last position, Himax. All right, so Himax is a Taiwanese semiconductor. All right, we played it as a growth stock, which is slightly different from all the others in the portfolio. Right, but we played this stock based on undervalued fundamentals. All right, so how is the stock done? Let's take a look this week. The stock has done barely nothing, actually. All right, look, after a week, it's gone up, it's gone down. All right, it's 12.40. So let's have a look how much it's worth today. What did we do? We did the 15 October $12 put for 119. So this is October. 15 October, $12 put for 119. All right, we have some slight profits today. All right, we can probably get it close for about 95 cents or $1. Right, so we're about 20 cents in the profit. Right, nothing to shout about. Okay, after 1 week. Right, so I'm sticking to this position. So now let's take a look at my exposure. I'm about 80% exposed. All right, so I'm gonna go ahead. I'm gonna add one more position this week. All right, everyone. Right now. So this week, what am I still going to add in this crazy marketplace over here? Right? As I said, I'm going defensive. Right? So what I'm going to do this week, right, is I'm going to put on another defensive stock over here. Right? So look, everyone, I'm going Colgate. I'm going clean teeth this week. All right? Let's clean up. All right? And get ready. All right? For the next move in the market. All right? So, like all other defensive stocks, all right, it has its earnings. It was punished over here. All right? Why? I'm not too sure. Let's have a look. All right, earnings was slightly under the estimate. All right, so that's probably why it was punished. All right, it did bounce off over here, and then after that, with the market going up, right, defensive stocks have money coming out of them. So it's broken over here. All right, but I do think it's severely undervalued. All right, and it's now hitting this last resistance breakout. All right, at $76, $77. So I'm pretty happy with this spot over here. So let's try to look for some put options to sell. Okay. Now, so I'm going to go with October, all right, since that's the next expiry that we have. All right, so let's go with the 77.50 puts. All right, I'm going to try to sell this for 165 today. All right, 165 today. Now, so this stock is going to cost me 7,750 for every one option that I'm going to sell. All right, so with my current exposure, right, which is sitting at about $92,000. The portfolio has, after profits, about 117,000 right now. So I think, all right, I have no choice but to trade only 2 contracts, right, on this Colgate trade, right? Okay. Now, So I don't want to use any leverage on this portfolio, all right? So I'm going to try for 2 contracts, okay, for the Colgate trade this week. So let me go ahead and place this order. All right, so 7,750 times 200 shares. So that's what we're looking at over here. 7750 times 2. All right, so I'm going to set aside $15,500 to sell 2 put options at 77.50. Let's see if they'll take my order over here. Hey, you guys are jumping my gun again. Next time, I'm going to place the trade before. All good, don't worry. All right, everyone. Okay, now, so since some of you jump my gun, all right, but let me also say I'm happy with 165. Okay, but I just want to get this order filled before we end the session, all right, because I'm comfortable with this trade. So I just sold 2 over here, all right, at 160. All right, okay, so I've decided 160. I'm happy to take it. All of you can continue working it at 165. All right, okay, that's perfectly fine as well. Okay, but I've just got it done at 160. Okay, now. So this is a confirmation over here. We sold 2 of the CL October 15, 77.50 puts, all right, at 160. Okay, all right, so now that's done. So let's go. Let's fill up this. All right, trade number 66. CL. Oh, it is 15 October, same trade, same expiry. Oh, 77.50. Okay, this is 27th of August. And we collected 160. Okay, now, so this trade, oh, it's 2 contracts, slightly lesser. Right now, so it's going to pay me 320 in cash flow, right, just for this, 5-10 minutes order, right? And I'm setting aside $15,500 to pick up 200 shares if I need to, all right? And let's see what's the ROI on this trade. I do believe it's slightly lower, right? But at least my capital is going to work. So that works out. This, it's a 49 days expiry. So it's 7 weeks to expiry, yeah? All right, so it's this. All right, there we go. Oh man, I did this wrongly again. Let me correct this. Should be here. All right, 160 divided by 77.50. Right now, this trade pays 2.06%, right? And it has a 7 weeks expiry, right? So annualize it, it is a 15.3% return, right? So nothing to shout about, and which is very common, right? Because, Colgate-Palmolive, all right, is what we call one of those low beta stocks. Now, what do we mean when we say low beta stocks? Now, you can actually see this on the platform, right? Where, it has a beta number, right, at the end. Right now, what does beta means? It means if you compare this with the S&P 500, right? The S&P 500, okay, let me pull out the SPY, okay? Okay, you can see this. The SPY has a beta of 1, right? So it's a 1-for-1 movement, yeah? Okay, now, so what it means is when the SPY moves up by $1, all right, our Colgate-Palmolive trade, okay, only moves by slightly more than half that amount. Right, because you see, this has a beta of 59. Oh man. There we go. All right, now, so this is one of those what we call low volatile stocks. Okay, it's not as volatile as even the market itself. Yeah, okay, it moves slower, it moves lesser, right? It has lower risk, all right, and that's what it's trying to say over here. Yeah, okay. Now, so this is what we're going over here with a low beta stock this week, and also a very, very defensive stock. All right, and that is the trade that I'm adding for this week into the portfolio. Okay. Hi, Kelvin. And Kelvin's question is, Hi, Terence. How do you screen for these stocks? Now, I have my own cash flow stock list, which means every student comes into my mentorship program, or any student who's a trading member with us, okay, and I'm trading membership, right? They get access to my stocks, okay, my basket of stocks. So all I do over here on Friday, it's most of the time, at least 95% of the time, all right, I'm probably going back to this basket, all right, and selling put options on any of these stocks inside this basket that has low valuations. Yeah, okay, so that's all I'm doing. That's why it takes me very, very little time. Now, what makes my basket so special, right? What makes it so special is that all of them are what I call and classify the right stocks. So how do I classify them as the right stocks? Which means if you give any of these stocks a 5-year, a 10-year time frame, right, they consistently, right, show that their stock price always appreciates, right, in 5 to 10-year windows, right? So the longer you hold on to this stock, right, the higher these stock prices actually go. Yeah, okay, so that's what makes them the right stock and makes them so amazing. Yeah, okay. Now, so if you'd like to find out more about how you can get access to this list, right, do consider joining some of our full mentorship programs or be part of us as our trading member. Okay, because in our trading membership, we actually offer and trade twice a week, right? Live trading sessions twice a week, right, with all our trading members, right? That's probably the best that you can get anywhere in the marketplace out there, because that's more than 100 live trading webinars that we do and trade, right, together with our members all year round. Okay, all year round. And that's even excluding all the training, all the live trainings that we run for our members on a month-to-month basis. Yeah, okay, all right. Now, so if you do have interest in our membership over here, just send an email to my team, all right, and they will get in touch with you, okay? All right, welcome, Kelvin. Yeah, okay, now, so Desmond. Okay, Desmond, yes, as per normal, okay, 24 PE is slightly on the higher side. But once again, if you remember what I said, I'm combining, all right, with the aspect that if the market's correct, right, defensive stock is going to enjoy the love of the money from the funds, moving out of risky stocks into safe havens, right? So that's really what I'm looking at. That's why I'm choosing an October expiry, right? I'm not choosing like all the way to January next year, right? This is purely a trade, right? Waiting out for the next market correction, right? Why? Because when the next market correction comes, right, we are probably going to see this move, right, from, this move, right, from Colgate, and that is enough, right? Because that will bring the stock from here, all right, all the way up to here, or perhaps about $80, and that's enough for our options. Yeah, okay, all right. Now, so I'm banking on strong fundamentals, which limits my downside, okay, on how far the stock can go down, okay, with the current market risk, okay, and then at the same time, if I'm correct, okay, even if I'm just halfway correct, okay, I'm actually going to end up profitable on this trade. So that's one big benefit I have as an option seller. And of course, after doing this for so many years, okay, I know what I'm doing. Yeah, okay, so that's why, it seems like it's so easy for me to find these trades over here. Okay, but once again, as you join us, all right, you'll be learning how to pick my brains, okay, and find out exactly how I do this week after week. Yeah, all right. So Desmond, I hope I answered your question. Okay, let's go, everyone. All right, I've got time for a couple more questions before we go off. Welcome, Desmond. Oh, yes. Right, before I do forget, and in fact, I've already forgotten it. Okay, now, many of you who are joining us, all right, I hope you have not forgotten, okay, because the hot and fresh giveaway, all right, is still going on, and it's going all the way until the 16th of September, all right? So do click the like button and make sure you share this Facebook live session, all right, as a public share, okay? All right, it must be a public share. So once my team verifies it, all right, we will allocate your share, okay, on each week's live session, right, with a number, right? So on 16 September, we will do a draw. Okay, so we'll do a random number draw, all right? And if that number matches your name, okay, what you stand to win is 3 slots are given away for our next and final 24-hour earnings explosion options live trading sessions with me, all right? The last quarter, all right, absolutely free, right? This is worth $397, right? But this is also the last time and last session we are running it at this price. Okay, why? Because I've been giving my students more than 6 live trading sessions with me. In fact, I've been doing 10, I've been doing 11, I've been doing 12 sessions together with them. Yeah, okay, now, so you can see, all right, at a price of 397 and giving the entire recipe of the strategy to them, all right, what a bargain this is. Yeah, okay, now, so next year in 2022, all right, with the results, with, you know, the outcome that we have and adding more value into this live trading event, right, the prices are going to go up. Right now, so if you want to stand to win one of those slots that we're prepared to give away, right, please make sure you click on the like button, right, for this Facebook live that we are attending right now, okay, and then make sure you hit the share button, but the share has to be a public share, okay, right now. So this has to be done via, all right, our cash flow Facebook group, okay. Now, if you do it via my Facebook page, that is not valid, okay, all right. If you do it via YouTube, that's not valid as well. You have to go to our Facebook group, all right, which is the public group over here, all right, be a member with us, and then hit the share button and share it as a public, yeah, okay. Now, so I hope that's clear enough, and thank you very much, Facebook user. All right, I'm sorry, I can't see your profile, so I can't thank you in person, yeah. All right, Desmond, I don't have a Baidu position. I have closed my Baidu position, look. All right, unless you're asking me if I want to get into Baidu. Right, but a week on over here, right, I'm probably not going to go into Baidu right now. Why? Because it's probably enjoyed a good rebound. Yes. Let me pull it back. Oh, it's not moving. There we go. All right, now, so, you know, there's this gap up over here, which I don't really like. All right, so 142 to 148 or 149. All right, so, you know, as they say over here, the gap might always fill up. All right, so if I do want to trade, I'll probably wait until it fills the gap of 142, 143 before I think about selling the next put option on Baidu over here. Yeah, okay. All right, now, so that's my look on Baidu. All right, Desmond, I hope it helps you. Oh man. All right, I have 2 Facebook users. All right, you're probably new with us, all right, in this Facebook live session. I thank you very much, all right, for liking and sharing the session. All right, but also do remember, all right, to go to the link. All right, let me put it out. All right, this time I shouldn't be blocking anything important. All right, go to this link over here that you see on the screen, streamyard.com/Facebook. Right, you'll be brought to a website with a Facebook button in blue, right? Just click on it so that next week when you join us again, right, I'll actually be able to see who's leaving the comments. Yeah, all right, okay. Now, thank you very much, City Chai. All right, Desmond, welcome. All right. Lawrence, all right, Lawrence. Now, if you're a participant in one of our mentorship programs, right, your opportunities for 24 hours should have been slotted. All right, so all you need to do is contact my team and find out which season, all right, you have already been slotted together with your mentorship program. Yeah, okay. All right, now, so send my team an email, and they'll be more than happy to help you out with clearing your doubts. Okay, Lawrence, William. All right, William. Right, if you want to find out about the full details of our real trade, okay, you can go back and scroll the Facebook session, all right, because I do believe Facebook archives it. All right, go back to the session where it's done on the 13th of August, all right, okay, and you'll see why, and we rationalize, okay, and took a trade on Rio Tinto. Yeah, okay, William? Okay, I hope that helps you over here. Okay, because, you know, anything that I'm going to say over here right now, it's probably going to be too tight, all right? It's not going to be detailed enough, and I don't want to do you a disservice. Yeah, okay, so going through and watching that Facebook live session that we did on 13th of August will give you the full details and my thought process of why I decided a trade on Rio Tinto. Okay, all right, William? Okay, all right, now, Lawrence. Okay, now, Lawrence, this is actually a simple question. If you look from a cost efficiency, right, then I would say that Tastyworks will probably work better for earnings-based trades. Why? Because they don't charge a commission for any closing trades, right? So for that specific purpose, because this system involves opening a trade and closing it the very next day, right? So with Tastyworks, we actually save one side of the commission cost. Yeah, okay, all right, now, so there's no kind of perfect brokerage solution, right? Because TD Ameritrade offers a lot more tools, right, when you trade on the platform, right? That is very, very useful as well. Okay, but when it comes to execution and cost savings, then Tastyworks is it. Yeah, okay, but these two brokers are pretty much my go-to brokers right now. Yeah, okay, so I do have accounts on both brokerages, right, and they serve me well for different purposes, different kind of trades with different systems and different disciplines. Yeah, okay. All right, welcome, William. All right, great. Now, so I don't see any more questions that are popping up over here, right? And once again, all right, I would like to take this opportunity to thank all of you for joining me and giving me your precious time of another Friday evening. Yeah, okay, now, so thank you very much, and I look forward to seeing you again next week, Friday, at our live session. Okay, now, so remember once again, to qualify as an entry to be in the draw for the hot and fresh. Okay, now you need to click on the like and share buttons, right, before midnight, okay, of the Facebook live session, okay, held on Fridays. Okay, once that is done, my team will actually start tabulating the entries and start assigning the numbers. So any shares after that, okay, will be invalid. Okay, so if you want to have more entry chances, just join us next week. Right, you will be able to get multiple entry chances, right, when you share and like each week's session with us. Okay, all right, now. So thank you very much once again, and I look forward to seeing all of you, okay, in our next Friday Facebook live session. Now, in trading members, the new members who are joining us, remember, I have a one-day boot camp together with all of you tomorrow. All right, so we'll be spending the day tomorrow, all right, learning how to be better option sellers. Okay, and you'll be seeing more of these stocks, right, that I've been talking about on Friday and why I love them so much. Okay, now, so trading members, I'll be seeing you tomorrow. All right, and for those of you who are joining us as publics over here, I will be seeing you once again next Friday. Thank you very much. Have a great weekend ahead, everyone. Bye-bye for now. All right, Melinda, yes, tomorrow is scheduled for about 9 to 5. I may finish earlier, right? But it's always the content first, yeah? All right, bye-bye.